Hi there, I'm Tyler Ballhorn, and this is the Stockscores Market Minutes for November 26th, 2012. This week's topic, "'Tis the season to be bullish." That is the question we ask, and I will try to answer that in this week's video. A reminder, you can subscribe to my weekly newsletter at the address you see there on screen, stockscores.com/newsletters.asp. All right, according to the Stock Traders Almanac, since 1950, stocks have averaged a 7.5% return from November 1st to April 30th. Meanwhile, from May 1st to October 31st, the average has been only 0.3%. Year in and year out, we see that the market tends to be strongest during the winter months and usually tops out in the spring. The question is, will the cycle repeat this year? Well, to answer that question, I've pulled up a chart of the S&P 500 over the last month, and anyone that traded the market through November will know that we had a pretty good sell-off and then a pretty good bounce-back rally. The concern has been the fiscal cliff in the U.S. and whether the United States would get their fiscal cliff in order, if you want to say it that way, whether the tax cuts would be extended, and whether the spending cuts would be delayed. Well, the market rallied in anticipation of that and broke the downward trend line in the last week or so. But today we saw the reality. There is no deal. People are back from the Thanksgiving long weekend. And at the end of the day, we had a little bit of a breakdown. So the short-term picture then is that we are likely to move lower in the near term. However, the market is certainly waiting in anticipation for something to happen from the U.S. government. And I expect if anything happens, that will happen in the next 2 weeks. So I don't yet think that we are destined to go sharply lower. I think we're just going to grind perhaps lower and then bounce back as the market begins to anticipate something better. This is a chart of the S&P 500 over the last year, and you can see that the upward trend line was really broken a couple of weeks ago, but it quickly came back from that. And I think that that is okay. I think maybe we had a little bit of a liquidity issue, and that caused that few days of selling pressure to go through the upward trend line. And we recovered, and we've since broken that short-term downward trend line. So the bias then is that the market probably goes up, but I wouldn't be surprised to see the market kind of grind sideways in uncertainty in the very short term. And assuming something gets done, I think the market goes back to the new highs to finish the year. The TSX has a similar sort of pattern in terms of a breakdown and a comeback that exceeded the breakdown. But this market has not performed as well as the U.S. markets because commodity prices have not been strong. For this market to improve, we really need to see the U.S. dollar weaken, and that will give some support. Now again, today, at the end of the day, there was a breakdown, some selling pressure, and I think in the short term, we'll see this market move a little bit lower, but any bit of news out of the U.S. will help this market and really all global markets move higher. Here's a chart of the Russell 2000, and you can see here a little bit of better representation of really what we have right now, where the market sold off early in November, bounced back from oversold conditions late in November, and we've come up to that upward trend line where today we got stuck. In other words, the market remains pessimistic but hopeful. It's not yet ready to take the market through the downward trend line, which would be a break of that pessimism. It is simply a case that the investors are hoping that something will turn around, and we're on the verge of that, but not yet ready to jump over the cliff. All right, the 20-year bond rallied in the month of November as money moved to safety given the uncertainty in the market around the debt and tax issues in the United States, and it remains, I would say, in a slightly bullish pattern. That's a little bit of a negative for stocks, but I think this is people just hedging their bets and trying to look for some safety until the fiscal cliff problem gets sorted out. The US dollar has sold off in the last 5 or 6 days, and that really helps stocks and commodities. It bounced back a little bit today. Wouldn't be surprised if it bounced back for a few more days because we don't yet have a deal. But I think that ultimately this market probably heads lower, particularly if the U.S. gets its situation figured out. The euro is an important chart to watch because it tends to move with the North American stock markets. US dollar goes down, euro goes up, and of course the stock market goes up as well, as does many of the commodities that we monitor. So we've had a little bit of strength over the last 5 or 6 days here, coming into resistance, probably pulls back 1 or 2 more days and then continues to rally. Generally speaking, I'm optimistic on the euro and pessimistic on the US dollar in the very short term, but the longer term picture still it favors the US dollar. Gold had a breakout last week when there was some weakness in the US dollar. Looks more likely to go higher than lower. It is a tough situation to call because we've got these conflicting charts. We've got the US Treasuries, which look pretty good and likely to go higher by what I mean by that, and the gold looking likely to go higher. Really, they should move in opposite directions. So it's I think a lot of big hedge funds are just looking to kind of hedge their bets with different trades. Oil market is in a downward sloping channel. At the top of that channel, more likely to go lower than higher, but if we break that downward trend line, well, that's a reversal. But my feeling is we probably get stuck here and see oil prices go down, and that of course should hurt energy stocks. If, however, we do break that downward trend line, well, then we got to change our view because the pessimism will be broken. So I'm neutral on US stocks, Canadian stocks, but I think it's very risky here. We could break higher if there's some sort of deal done, but given the uncertainty in the market, you're probably not going to see a lot of stocks moving. You're going to see a lot of uncertainty around the market, and that could cause stocks to drift lower in the short term. Although all it takes is one bit of news coming out from some congressman who says a deal is going to happen, that sort of thing, that would cause the market to rally quickly. So I'm not comfortable shorting the market because I think that there's too much risk in shorting the market, but I'm also not eager to buy it. I think it's a good time to just sit on the sidelines and be patient and wait for a strong opinion and an end to the uncertainty. Gold neutral. I actually think gold will go higher, but the upside isn't really considerable here. And so I don't think there's a trade in gold. Oil I'm bearish on. It's at the top of that channel and it probably heads lower. You know, the markets want to go up. I think that the housing market is improving. Corporate earnings are improving because corporations have really gotten efficient and lean. A lot of their competitors have gone out of business. And so the environment for earnings to improve is really there. We just need some of the uncertainty to be taken away, some of the government problems to be fixed, and that will cause investors to come back to the market. And I think this market could really go for a great rally, but it's just not quite there yet. We need that catalyst. So look for prices to probably drift lower in the near term, but any good news from Washington and the market should rally significantly. Well, that has been the Stockscores Market Minutes for November 27th, 2012. Have a great week in the market and trade well.